Here's an example with moving averages, very short term. You could, as I said earlier, just wait for a crossover of the moving averages, or as you can see here, we've done that with the moving average. You wait for a crossover. As soon as that crossover happens, you just enter, and then you can exit when the crossover reverses, and there's various opportunities to reverse there. Or you can look to say, I will use these resistance lines. So what are resistance lines? Let me explain those to you, because they're often used by traders. Resistance line basically is usually a horizontal or near horizontal line. Sometimes it'll be a little bit diagonal, which just joins up price highs, and that becomes resistance. If it joins up price lows, it's called a support, and you can see the price bounces off of support, bang, bang, and because it's a horizontal line, we consider that that has some kind of significance, and therefore when the price goes near, we expect it to go to bounce off it. So if you entered around here at the crossover, let's say, the reason you might put a stop loss, and I'll deal with stop losses in future videos, but is you don't expect the price to go in the opposite direction of your trade. So if you entered here because you expect the price to fall short and go lower, why do you expect that? Well, because the shorter term moving average crossed below the longer term moving average, so that when it happens in that direction, which is the opposite to what we saw before for longs, what happens in that direction, you go short and the market is dropping down here. When that happens, you say, well, okay, that's the direction I expect to go in, but where do I exit in case I'm wrong? That's very important, and I'll mention stop losses, money management later. Where do I place the exit just in case I'm wrong? Well, the place you do that is you often find a nearby resistance, and that's where you place your stop. In other words, a point where the price has not gone above before, and you say, well, if it goes there, it goes above a nearby resistance, that'll be my stop loss. That's the most I can lose, and that's important because now you know the most that you could lose is. Another way in which traders will often look to enter is when the price does break through a resistance. They'll say, look, if it's gone through resistance, especially two lines of resistance as it has here, then that's a good point at which to do a long entry, to enter, especially if they get confirmation from the moving average, the shorter term going through a longer term moving average. Now we could look at any time frame which suits our work schedule. We could look at daily charts if we only want to get very few signals because we're busy at work, or we could just look at 5-minute charts because we're in front of the computer, we've got all the time in the world, and the 5-minute charts will obviously give us different signals to the daily charts, but they all allow the opportunity for profit as a result. So here I've shown you quite a few different strategies. Of course we go into this in far more detail in my other videos, and I explain the strategy about moving averages and resistances and supports in far more detail with pinpoint accuracy as to when you enter. But at the moment I wanted to just give you an overview of how we decide when to buy and when to sell. So just as another reminder and summary again, when do we sell to go short? Well, when the short-term moving average moves below the longer-term one, because that suggests that the price is going to continue moving lower. Where do we place a stop loss so we know our maximum risk at a nearby resistance level? We might also look at entry when the price breaks above a resistance, or for that matter below a support, on the basis it's going to continue moving lower.